Welcome back. And now we are hearing about ICP or internet computer inflation. And there's a lot of people that are potentially saying that ICP has unlimited inflation and that Cryptoviser should take a look at the supply. So that's what we're going to do in today's video. We're also going to be talking about a lot of the drama in the Cardano community about the Cardano Genesis keys. But we're going to be starting right here with some fun news, and that is Fidelity. Jameson Lopp, one Bitcoin maxi and also the chief tech officer at Casa Hodl, said on X that his 401k has been entirely Grayscale Bitcoin Trust for a long time, but he intends to convert the Bitcoin Trust over to Fidelity once the ETFs launch in order to support decentralization of crypto. And he retweeted his own earlier tweet from December that says, "This is horrendous level of centralization within the proposed Bitcoin ETFs. It seems Fidelity Digital Asset is the only one doing it right." And effectively, he posted a screenshot of basically all the ETF applicants and what their custodian for the crypto is going to be. And you can see most of them are choosing Coinbase. Obviously, Coinbase is the most regulated crypto exchange, but probably in the world, but definitely in the US. And they have the institutional custody platform and prime platform that are separate from the main retail platform. And that's where I think that we're going to see a lot of money being made for Coinbase in the years to come. But it's showing here that Fidelity is choosing self-custody. Now, if you guys are not aware, we've been covering Fidelity on this channel for years, literally since I started the channel back in 2018. And by the way, this is the Cryptoviser podcast. We talk about everything crypto, blockchain, investing every single day of the year. So make sure you guys are subscribed to the channel. Also, do me a favor, give the video a free thumbs up. I provide this information every single day since 2018 to bring everybody the latest happening in the financial world and hopefully keep you guys on the right side of these markets. But again, nothing I say is financial advice, so do your own research. Now, just earlier, a few months ago, in October of 2023, we heard that the Bitcoin mining company Marathon Digital is going to be custodying some of their Bitcoin with Fidelity Digital. Now, if you guys are not aware, Fidelity, this is what I was saying earlier, that basically I've been covering Fidelity on this channel since I started it because Fidelity is the first, I think the first financial institution in the world that was actually mining Bitcoin at their offices since 2014. They have been heavily involved in crypto, and that's why when we heard about Fidelity opening up crypto trading to their customers, this didn't surprise me at all. It was just a matter of time. And Fidelity has done this. They're one of the largest asset managers in the United States for most people's, retirement funds. They have over $4 trillion in assets in their management. And if you go to fidelity.com/crypto, if you have an account with Fidelity, you can open up a crypto trading account and you can trade and buy Bitcoin or Ethereum in your account. And, pretty much it's pretty simple. And this is from an institutional level. And so we're going to probably see a lot more banks getting into this, right? Because the custody game cannot be all with Coinbase. And I think these companies understand that there is an existential risk if Coinbase gets hacked, Coinbase has any issues, all of these major ETFs are going to have problems, and not just the ETFs, all the companies and all the individuals that hold their crypto within their custody. So I think eventually we're going to start to see more kind of competition and more spread out, but spreading out of these custody providers. But the main thing is that we need to see regulations. That way these companies can create their own custody platform. The only reason Coinbase, I think, did it when no other major exchange, I mean, Gemini has some institutional custody, but it's not really their big focus. Coinbase it is. And I think that, a lot of that has to do with the regulations and that these companies don't want to deal with it. Anyway, moving right along to the Cardano drama of the day. Now, I've covered Duo 9 before. I believe that Duo 9 is has interesting perspectives on different areas of the market. I do think that some of his comments are probably a little bit biased, but I do think that it's at least worth listening to and understanding what the other hand says, right? If you're very bullish on something, you should also hear the bearish argument. If you're very bearish on something, you should also hear the bullish argument. And if you're kind of neutral, you should hear both arguments. That way you can understand, whether you should change your viewpoint. Because here's the deal. In the investing world, I've learned this, and I've covered this extremely extensively on this channel, is that if you have a one-track mindset, it's not going to work in any investing, right? For instance, think about it like this, right? We talk about crypto is, or investing in anything. It's really gambling because the money, the price can go up and go down. It could stay sideways. Who knows? But if you go to a casino, right, you know that you're gambling. You know that the odds are against you. So if you only go into a casino with a one-track mind, like, oh, I'm going to win $1 million in the casino today, you're going to end up going broke. And then when you go broke, you're going to take out more debt to then go, lose more money. You have to be able to switch your mindset and say, nope, I'm losing out here. It's not working out. Maybe it's not my night. Maybe there's a better odds at another casino or whatever. The same thing in crypto, same thing in investing, right? If you are in a losing position, sometimes you need to get out of it. If you're in a position that, guys, I've been holding Litecoin and Stellar for years. We've been covering these cryptos for years on this channel. I held Cardano from 2017 all the way up to 2022, 5 full years, guys, 5 years. Well, most people didn't even know what Cardano was. I was holding it, right? Many of you probably weren't even investing, didn't even know anything about Bitcoin or even Cardano at, when I was holding, right? Back when I started this channel back in 2018. So I think it's important that you guys understand, right? You can hold something and change your opinion on it. And this is what I've done with Stellar. This is what I've done with Litecoin. These are the most underperforming assets in my portfolio and really pretty much in the market as well. And so it just was not worth holding these coins any longer, especially when I believe that there's going to be other movements in other coins to the upside, as we've seen with Solana, we've seen with Internet Computer, and we're going to be talking about Internet Computer in just a few minutes. But before we go there, let's get into some of this Cardano drama. And by the way, yes, I did see the Coin Bureau Cardano video. If you guys didn't see it, there's a lot of drama around the Coin Bureau video because I didn't really hear anything in his video that I was not surprised by, but I did basically hear them saying that Cardano needs USDC, and that's what we've been talking about pretty extensively on this channel. Because it's not just about having the stable coin. It's about having the liquidity and having that cross-chain functionality when you have USDC on. But I'm not going to harp on USDC because you guys are probably like, Cryptoviser, we've heard it. We've seen all your videos. It's really annoying at this point. But I think that it's important that this is the topic. But listen, guys, Coin Bureau, I believe that his video was very neutral, and not just neutral, but very pointed, right? Maybe he used Chat GPT to help him script the thing, and they watched my videos before, because a lot of the stuff is what we talk about in this video. This cycle coming up in 2024 and 2025, the bullshit walks, guys. The bullshit walks. And at the end of the day, any of these blockchains, it's not just Cardano, guys. It's any of these blockchains. I dumped my most of my Litecoin, dumped most of my Stellar. These blockchains are not focused on anything having to do where the coin is going to even be implemented. Same thing I've said about XRP. Everyone's saying, oh, well, the XRP army is huge and XRP is going to go up. The fact that XRP barely moved, it just basically doubled in price after the Ripple won the lawsuit, tells me that this is not going to be a performing coin. It's just not going to be performing. And Ripple is still selling their XRP from their escrow. So that's going to continue to be sell pressure. So why would I be in this asset when there's other assets that are not going to have those kind of tokenomics this cycle? I'm not saying that I don't believe in Ripple or XRP in the long term. I'm just saying from an investability standpoint, it just doesn't make sense. But the maxis will say, but Cryptoviser, whoever the hell you want, not me. But anyway, so Duo9 wrote this. Cardano fanboys have no clue that ADA is just a VC or venture capital coin. They will yell and disagree, but the facts remain. ADA is owned by 3 entities holding the Genesis keys. Now, if you guys are not aware, Genesis basically means the first block. So Genesis keys is basically the key to the blockchain, the access to change the parameters, which we already know. And that's Cardano Foundation, Emergo, and IO Global. He says that's why the SEC called it a security. The last 2 are venture capital that raised the money for ADA, meaning IO Global and Emergo. A total of $62 million was raised in various ICOs between 2015 and 2016, according to Duo9. And in late 2017, ADA Chain was launched. That's when I started learning about ADA. There was really nothing to learn because it was literally just a coin. It was at the peak of the market. And through 2018, that's when you started to see IO Global and Emergo and Cardano Foundation kind of building the path forward for where Cardano was going by listening to the community, listening to holders, listening to the developers, etc. And so Cardano never took off due to the lack of adoption, according to Duo9. He says developers and projects are leaving their ecosystem because it's hard to build on Cardano. Now, we've heard this before. The Cardano maximalists will say, but Cryptoviser, whatever. Listen, guys, even Meld, which was a Cardano project funded by Cardano maximalists. They're building on Avalanche. They've left the Cardano blockchain. Now, listen, it is what it is. I believe that there's functionality that just is not possible on Cardano, and that appears to be the reason why they're leaving. There's no other reason why they would leave, and people are. The narrative is trying to be shifted towards, well, it doesn't really matter. Listen, it doesn't really matter because a lot of blockchains or projects end up leaving one blockchain and going to another. But the point is, we're now entering another bull cycle, and Cardano doesn't have the adoption that we've been promised for years and years and years. And whatever the reason behind that is, I don't know. I do think some of it has to do with interoperability. I think some of it has to do with the funding mechanism that is funding these projects that are not deploying the technology as fast or at all compared to other blockchains. And that is really unfortunate because there's a lot of really talented individuals in the Cardano developer ecosystem. And, then we see Project Catalyst where we're funding projects that just don't actually deploy. 1,000 projects in the pipe and only 100 projects deployed. It's just not it's not keeping up speed with the rest of the ecosystem. So as much as I love Cardano, it at this point it's not investable because they don't have any interoperability and every other chain does. And that's really where we're moving in this upcoming cycle. That's what I believe, at least in my thesis. You may disagree, and that's totally fine. But I want to hear what you guys think down below. And don't forget, while you're down there, to give the video a free thumbs up. And again, I'm trying to be as objective as possible. I'm not trying to hate on Cardano, but there's always going to be, but Cryptoviser, the complaint desk is closed, guys. We're still in a bear market. Anyway, Duo9 continued saying, those that stay are usually bought or paid by the above three entities. This comes at your expense since they sell ADA to finance their costs. And so basically what Duo9 is saying is what we were just talking about, right? Project Catalyst is paying the developers in the ecosystem. IO Global, Emergo, or Cardano Foundation, they're paying developers in the ecosystem to stay. This is what Coin Bureau said in his video about the Nami wallet, that Nami was the most used Cardano wallet, but they were about to shut down, and then IO Global had to come in and basically bail them out and buy them. That's basically what Coin Bureau said. I don't know all the details behind it. I don't really care. Because the bottom line is the same thing with Ripple and XRP, right? They funded $200 million lawsuit, and a lot of that was funded, I would imagine, through the XRP that they sold. So they're selling to the community that's believing in them and believing that if they keep acquiring more the coin, the price is going to go up, but the price can't go up because there's this constant selling pressure from the funding mechanism in ADA, that's Project Catalyst, or the Genesis keys, right? There's been questions about how much ADA Emergo still has left because they had something like 2 billion ADA or 1 billion ADA at Genesis at the beginning. IO Global had something like 2 billion, and Cardano Foundation had something like just under 1 billion, something like that. All of that information is on the Cardano website, but there's questions like how much ADA do they have left, right? How much did they actually spend, and how much are they spending right now? Because again, that goes into the community who's buying, thinking that the price is going to go up because of the development, but they're funding these projects that are not necessarily deploying any technology that can be interoperated. And so that's kind of where the narrative is right now in the ecosystem, right? Is this an investable coin? For me, it hasn't been investable since 2022. Now, if we hit 20 cents or below, that's a whole different story. But there's a lot of people in the community that say Cryptoviser, we're never going to hit 20 cent Cardano again. And so they're basically telling me that I'm never going to own ADA again because we're not going to hit 20 cents. And that may be absolutely true. But again, right, we've seen Solana 10x. Internet Computer has already 4x'd. Algorand, from the bottom ever, all-time record low of 9 cents, is already double or triple where it was. And Cardano's barely at a 2.5x. From an investability standpoint, that creates an issue. Anyway, Duo9 continued. And by the way, this whole video is not supposed to be about this, but it's turning into it. And I want to know what you guys think down below, right? Because I want to hear your input as well. Here's a key question to enlighten you. Duo9 says, why does Tron have native USDC and Tether on its network, but Cardano does not after almost 8 years since it went live? Well. Guess Duo9 watches the Cryptoviser podcast, because I've been saying this for years now, right? The Cardano ecosystem, we don't need USDC. We have Deged stablecoin. It's like Deged, it's not even a fraction of what USDC is doing, right? There's more USDC native on Algorand than there is Deged on Cardano. right? Like by like 3x. And so, yeah, Tron has USDC, and people say Tron is it's a scam and all this stuff. And meanwhile, USDC is native on that chain. Now, I posted a video the other day that it seems to be this chain hard fork that's coming up for Cardano in 2024 may actually be enabling the functionality to create this cross-chain interoperability, because I personally don't think that Cardano actually can have native USDC. I don't think it's possible at this point, or really any interoperability at this point, because why wouldn't we already have it? Exactly what Duo9 is saying here. He says Tron network is seeing trillions in stablecoin transfer per year. ADA, $20 million in stablecoin market cap, right? It's a fraction of a fraction. It's nothing. He said, I could stop this post right here, but here's so much more to cover. He says Cardano is number 10 in terms of DeFi TVL at $368 million around there, much of it thanks to ADA's recent price pump. Now, while that is true, there has been an increase in Cardano. But if it wasn't for the pump in the price, Cardano would not be in the top 10, because there hasn't been that much of an increase in ADA over the last 3 months or 4 months. When the price has increased, there may have been some, but most of the reason it's in the top 10 now is because of price increase. Let's be real. But that doesn't take away that Cardano DeFi has been increasing, right? But it's still not enough. That's the point. It's not enough, because Cardano community will focus on the fact that they're like, well, we're top 10. It's not just because of price. It's like, yeah, but it's not enough. Base is still more in TVL than Cardano, and Base, they don't even have their own coin, and they're brand new. Anyway, he says that's 0.37 billion out of 53 billion DeFi market cap, or 0.7%. That's not even 1% after 8 years of development. Interesting. He said, do you understand why developers are leaving? He says the slow adoption, if you can even call it that, is blamed on Charles due to the time-consuming academic approach. They said that he cashed in big after leaving Ethereum early on and then built his own chain, now known as ADA, cashed in big. While Ethereum went out and broke things to grow, ADA published research papers. He says, seriously? No joke. This is why ADA has many fanboys, because they say it's superior. Guess they never heard of meme coins that saw more adoption. This lack of adoption is why Cardano is now full on revising their governance system to decentralize. Their latest update is called Voltaire, or Cardano Improvement Proposal 1694. Note the word revise used in their documents. You must understand that those VCs, venture capitalists, have every interest to farm this for as long as possible. After 8 years, he says, they need to do something, else more money will leave their chain for good. The best part about Voltaire update, he says it will have a constitutional committee that will likely consist of the current Genesis key holders at first, Cardano Foundation, Emergo, and IO Global. Funny how that works, right? Charles says the keys will be destroyed as new members will displace current incumbents. Duo9 says a constitutional committee was not on my decentralization bingo card this year, but it fixes one problem for Charles. Cardano is no longer a security. He says Charles says that SIP 1694 makes it irrelevant who holds the keys. Duo9 says it just obfuscates more truth and reads like an exit for the VCs. eToro, Robinhood, and Revolut delisted Cardano. In the past, VCs know they're on borrowed time to decentralize or exit. Once the community takes over, they won't care anyway. Duo9 says right now all efforts are on decentralization or SIP 1694 to suffer in the midst of the new bull market. By the time VCs exit, the community will not be left with much but a ghost chain and an inflated market cap thanks to 45 billion tokens. He says there are no independent layer 2 solutions on Cardano. Why? Because Cardano does not need to scale. Where's there to scale? He says the layer 2s that exist, Hydra and Mithril, are both developed by, wait for it, IO Global or Charles. See the problem? He says the most striking part of this is how little Cardano has integrated with the rest of the crypto space. It's an abandoned island in the middle of the Pacific ruled by 3 entities, basically a security, remember? He says even Tron did better, which already says a lot since there's one-man show without much interest in research or papers. And if this is news to you, then you haven't seen Coin Bureau's latest video about Cardano, which inspired Duo9's post. He says those are some hard truth pills to swallow. And he said, I respect the ADA community, and this is not intended as FUD, but please wake up. Don't marry your bags. Now, I agree with the last part, don't marry your bags. And this is what I say all the time, right? Now, listen, regardless if you agree with this or disagree with this, he's stating facts in here about the data of the blockchain on Cardano. That's really important to remember. And so, one Cardano user, community member, Maxi, whatever you want to call it, he wrote this whole long post. And I'm not going to read through the whole post because it's just a lot of rebuttals to what Duo 9 says. But you guys can pause the video here if you want to actually read it. I'm scrolling through so that you can pause it and read it if you guys want to. But we're not going to read through the whole thing. You could basically say Cardano's not, centralize all this nonsense, right? Well, Duo9 responded saying, thanks for the time to respond. Let me answer your points. He said the most decentralized network is Bitcoin, followed by Ethereum. ADA has big problems despite its merits in terms of decentralization. He says, too, the TVL is one great metric to illustrate how ADA is lagging behind others. DeFi on ADA was late to arrive. That's true. And also, there's not much built. It's all siloed in Cardano. And we've covered this before. If you go to DeFi Llama, click on chains, and then click on Cardano or the other chains, you can actually see which chains are interoperable. So if you click on Ethereum, most of the DeFi in Ethereum is interoperable. So this also helps to accelerate the growth of that DeFi ecosystem and the usage of their network. Duo9 continues saying, without a major stablecoin like USDC or Tether, something that I've been harping on for a while, ADA's DeFi will never happen. Do you know why Tether or USDC are not on ADA? No, I don't know personally. I've been wondering, and I personally just think that Cardano doesn't have the technology to capable of doing it. I don't know what else. I'm an investor, not really a technologist, so I don't really understand how Cardano as a blockchain would not have that when pretty much every other blockchain does. But it seems that's the reason. And we don't have any real reasons besides the Cardano community saying, well, it's because Circle wanted $1 billion from Cardano to get it. No, that's not true. That's bullshit. Anyway, moving right along, Duo9 continues saying most of the DeFi space is built on top of Ethereum because of point one being that's most decentralized. ETH is the best solution to date after Bitcoin, but now competition is increasing, and I'm not sure ADA is even a good alternative to it. Basically, he's saying, right, there's a lot of other alternatives. You have Arbitrum, Polygon, Avalanche, Polkadot. I mean, there's so many other chains that you can choose. Why Cardano, right? He continues saying Cardano is great on paper, but not so much in terms of use cases. Competitors seem to have done better. Look at Tron. People use Tron to move value around, not so much on ADA as the TVL shows. He says governance is a waste of time as Bitcoin is demonstrated by not implementing it in the first place. The only use case of governance is to avoid a security label as from the SEC. ADA is not the first to do this. He says, so what about all the developers and projects that left Cardano? The video from Coin Bureau was quite explicit. He said, I agree, no chain is perfect and ADA has its shortcomings. I've seen ADA fail at adoption every cycle. Spelling it out should not be such an offense. Coin Bureau did well and mirrors my own evaluation of ADA. I will change my opinion when ADA proves me wrong. And so now you hear the investor community, right? They're no longer like believing the promises. That's what it sounds like. It sounds like the community is like, no. Like, we need to see these things implemented. And this is what I've been saying for a year at least, right? Is that Cardano needs to catch up. I mean, this is one of the reasons I originally sold my ADA in 2022 was because we were already basically 4 months out from when Goguen launched, which was smart contract capabilities. And there was no DeFi. 1 week after I posted that video, 3 dexes pop up. And for me, it was just too much, right? It was too much. We were at the end of the cycle. It was not worth holding. And over the last 2 years of the bear market, what we've been doing on this channel is exploring what other assets we can be in that are going to perform better, because this is about protecting our financial futures, protecting our retirements, right? This is not about necessarily getting rich, because what is rich? This is about, really making sure that we have a retirement. That's important to understand. And so to me, I would rather have a good retirement than be right about which coin I love the most, because it doesn't really matter. I can love Target as a store and love Walmart as a store and not hold their stock. I can love eating at Panera Bread, which I don't. It's actually not the best food. Or eat at Chipotle or eat at McDonald's or eat at Burger King and not own the stock. That's a big difference. So I can cheer on a crypto and not hold the coin. And currently, I'm not holding the coin because I just don't think that Cardano, let me rephrase. At this point in time, Cardano is not investable. It's the same reason that I've flipped out of Stellar. In my view, even though we may be at multi-year lows in terms of Stellar's price, it's not investable. The price has not moved. I also looked at Litecoin. Litecoin is the same thing. Litecoin, Cardano, and Stellar. These three coins, and probably you could put XRP in it as well. These coins do not move during the 2020-2021 cycle. They made no major moves until basically all the speculative moves at the beginning of 2021. That was it. They didn't really have pumps at all. They had major kind of moves, maybe 70% increases throughout the market. I'm not saying there was no volatility, but the volatility wasn't like with some of these other coins where there was going up 10x, 20x, 30x, 100x. And so yes, Cardano during the last cycle went up 100x, but that happened during a very, very short period of time. And so anybody who wasn't in there already during that short period of time, and I would rather have more volatility in the market and higher moves in the market. So that brings us to my other favorite crypto, and that is ICP, Internet Computer Protocol. And by the way, guys, you can disagree with what I'm saying, and that's totally fine, but let's still be friends. Don't forget to give the video a free thumbs up. Now, we're going to be talking about Internet Computer because a lot of people have been writing in the comments here on X, on Twitter, oh my God, ICP has unlimited supply. Cryptoviser, how can you be talking about this crypto when you're talking about coin burning? Well, Avocado Research wrote this. Many people have criticized ICP or Internet Computer Protocol for very high inflation and predicted death spiral in 2023. But if you look at the numbers, it turns out that for the entire year of 2023, real inflation was 3.9%. There is still hidden inflation by the maturity in neurons, but we don't know when that will be realized. The total supply on January 1 of 2023 was 493 million ICP. 1 year later, at the beginning of 2024, we were at 512 million ICP. So we're going to do the math right here. That way we can understand how much we really saw inflate during the 1 year. Now keep in mind, most newer coins, they do inflate because they're releasing their coins or coins are getting vested and unlocked from Genesis. It's typically normal. Most coins should be distributed by the probably like the 10-year mark. Anyway, so last year ICP had a 19 million ICP increase. So if we look at this, we'll just say 20 million, right? 493. And if we multiply this by, let's say, they're saying it's 3.9%. So this should be 20. Yep, exactly. So it was 3.9% inflation last year. Now, if you imagine in 2023, what was the inflation rate in the real economy? It was around 3-4%. So ICP is actually inflating with where the dollar. It's not outpacing that inflationary rate. There's another way that you can see this data for yourself. If you go to the ICP dashboard, if I go to dashboard.internetcomputer.org, you can see actually like where the supply is currently. So if you scroll down to overview, you can see that the total supply right now is 512 million. Circulating supply is 454 million. And so I don't fully understand everything about ICP tokenomics. I'm still learning a lot about it. But I'm also looking at the macro, like ICP was at $2 at the low, and we basically hit that in September, less than 6 months ago from when I'm recording this video. But anyway, if you click on one of those, you can actually see the historic moves in the actual inflation and how many coins are actually dispersed. So if you go all the way down to the bottom of the page here, if this actually loads up, hopefully it does. We're in the process of ordering new equipment for the studio because sometimes, I don't know, I think that we just have outused our equipment. So we're going to be getting this fixed because I thought at first this was just their site. A lot of sites weren't working, but it's actually our setup. Anyway, so you can see this is the all since ICP effectively launched this dashboard. So you can see in 2021, in the middle, at the beginning of this is like the middle, it's May of 2021, the total supply was 469 million. So we're now at 512. So 512, we'll say 512.5 minus 469.2. It's a 43 million increase, just under 10%, basically 9% in the last almost 3 years, 2.5 years, right? I mean, you could say that's a lot. It's about 3% a year, right? And they're also burning coins. Obviously, there's not a lot of coins burned, 156,000 when, we're inflating by millions. But the burn mechanism actually at least takes away some of the supply and slows down that inflation rate. So although we are seeing more inflation, we are also burning some coins, and obviously not that as much as we probably need to. But I really don't see this number as a big hurdle right now. It is slightly higher than Ethereum. Ethereum is at about 120 million. And so ICP being at, 500 million, that's basically like 4 times the circulating supply of Ethereum. So if we keep that in mind, we'll be able to kind of identify maybe kind of where ICP would top out from a price perspective and also a market cap perspective based on, where the Ethereum price is. But what I probably will, I'm going to be doing another video. I mean, we have some more info on the inflationary metrics, but I think that the numbers should be clear. Like 3 to 4% inflation in a newer coin, I don't think is that big of a deal. If you guys do, let me know down below in the comments. But I think that we should probably be kind of asking Dfinity like what their viewpoint is on increasing the inflation rate, because I do think that burning coins to deflate some of that. Or I should say offset some of that inflation is probably going to be good in the longer term. And it will also be more bullish for holders and incentivize holders to hold for the longer term. So we'll see what happens with that. We covered a lot in today's video: Cardano drama, Fidelity, loving Bitcoin, and internet computer protocol. Let me know what you guys think down below in the comments of the video. Don't forget to give the video a thumbs up, hit that subscribe button. We upload every single day of the year. Check out our other videos on the Cryptoviser podcast channel. See you guys tomorrow. Crypto on.